Morning. I'm Steve, so I'm a chartered accountant with Plumber Parsons. So I get to get involved with lots of different businesses. So I get to see things from both sides. But I think everyone in this room, we can be a little bit happy because you're here. You're obviously a bit switched on. So you are the ones that are avoiding the bad debt. You're not the ones that are ever going to not be able to pay. So happy thoughts, hey? Before we get going with this, just want to pick up on something that the guy said earlier about statutory demands. We act for, I don't know, a couple of thousand companies, and as part of that, we are their registered office. So quite often, someone does turn up with a statutory demand, and it's hilarious. Oh my word. The client comes in and picks it up. Shall I email it to you? No. Shall I drop it around? No. They come in and pick it up. It really does get things moving. It's quite an indication for us as well about what's going on with the clients. So statutory demands, brilliant, absolutely brilliant. Ask them about third-party debt orders as well, because they're funny too. Well, at least they used to be. That is good fun. The only bit of advice that they gave that I would contradict is when they said you can do this yourself. Probably not. Any form, anything, if it's got to that stage that you're owed money, talk to the lawyers, because filling in a form wrong takes weeks and weeks and weeks to get right, fix, undo, so just get it right in the first place. Now my bit, accounts and warning signs. This is all about not having the problem in the first place. So doing the solicitors out of a job, really. Oh, hold on.
What's the down button?
Here we go. So before you provide your goods, services to anyone, you need to check them out. If you're, providing 30 grand's worth of services, you do need to check them out. Go to the bank and ask for 30 grand. They'll check you out properly, won't they? Want your inside leg measurement and all sorts. But check them out properly. We do have problems with this though, because it's accountant's fault, really. Publicly available information is what we're going to do first. Now, publicly available information is largely Companies House. Credit references agencies are useful. Their starting point is always Companies House. There are companies that provide their details to credit referencing agencies if they're never going to get used a lot. But mostly anything is based on Companies House, so you can do it yourself. We live in a world, and always have done, where there are a lot of exemptions for small companies, for red tape and compliance with this and compliance with that. And as a result, we've had pages for filing with the registrar, filleted accounts, abbreviated accounts, all of that sort of stuff. Which means that the full accounts are not usually at Companies House with the smaller companies, which can make it very, very hard to make a judgment because you get a balance sheet, which is very different from a balance sheet and profit and loss account. It says this is where the company is. There's even an exemption these days called FRS 105, which means they don't have to really comply with any accounting standards at all. And those accounts are so bad that the banks won't even lend on them. But they do exist in the world. So we'll have a look at some of those. So full accounts, get them from your customer. It's not unusual these days. All of my clients have their accounts prepared. They have 3 sets prepared. They have one for Companies House. They have one to provide to their suppliers and their bankers. And they have one for the revenue. They're all saying the same thing, just in different levels of detail, that's all. Yeah, we don't play those games. We don't play those games. Have a look at the accounts. If they're audited, you can take a little bit of assurance from that. That means that a firm of chartered accountants with a fairly hefty amount of regulation and a fairly hefty PI policy has had a look at them and given their opinion on them as to how correct they are or aren't. But it doesn't always work, does it? No, it doesn't always work. Yeah. I'm very glad I didn't sign the airlines report a few months ago. Hey. If you're still not happy, management information. Just phone up the client, say, look, you want 30 grand's worth of credit from me. I can see where you are at 9 months ago. Where are you at now? Let's have a look. And if they want your service that badly, they will provide it. Or if they want your credit that badly, they will provide it. If not, you do all the stuff that you'd expect to do, cash on delivery, all of that sort of thing. Confirmation statements and annual returns. That's another company's house thing. Every company every year has to submit a confirmation statement now. It used to be an annual return to company's house. And that will say if there have been any changes to who controls the company. So whenever you're on company's house, click on that link as well, so that you know who you're dealing with. You know who ultimately is in control of it, because it's not always clear anymore. An annual return up until a few years ago had a list of shareholders on it. That was brilliant. Now it's who controls the company, and it's a little bit harder to find. But if you know that at the outset, then when you're doing your letter of claim, you know exactly what you're doing to start with. Right, what are we doing next? The other thing that I missed out is customer references. If you are in an industry, you can say to them, well, who else supplies you? Can I have a reference from them? It's not unusual. We deal with it from clients. They say, standard thing, how's it been? What's your average payment time? Have they paid on time? Boom, 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 boom. And it is a thing. And clients are getting more and more used to providing that sort of information, particularly where there's large amounts of credit involved. We'll go through very quickly a set of accounts, just so we know what we're looking for. You can't really see that too well. This is a real company. This is a real, yeah, that was a good one. This is a real company, and it has everything on it. But this is what you would get from Company's House. It may be called filleted, it may be called pages for filing, it may be called whatever it's called. But this is what you will get these days. Oh, I've got a red pointer. At the top, intangible assets. Now that is goodwill. Okay, these don't say audited on them anywhere. They would say at the top if they were. That is goodwill. So that is purchased. So someone's bought a business or bought a product line or bought something in the past, but it's an intangible thing. And that is subject to the director's valuation. And they will say, ooh, we don't need to amortize that very much because this is going to generate income for years to come. And as we all know, directors have an interesting view of their own businesses sometimes. So, should this all go wrong, you're going to get nothing from the intangible assets at all. Tangible assets, better. Cars, vans, that sort of thing. But difficult. You can't sell them easily. They're not cash. It might be a machine that's bolted to the floor. It might be charged. You don't know. So you're really interested in your current assets bit and the creditors bit. So one should be more than the other, because otherwise there's a cash flow problem there. Now, this particular company, its cash has gone down from £100,000 to nothing, pretty much, over the last year. But it's still got more assets, readily available assets, than it has got liabilities. So you might take the decision to actually, it's had a bad year, or it's paid more dividends than profit. You never know the reasons for these changes. So you might decide to advance that company some credit. Don't stop there. Just don't ever stop there. Ask them for the full accounts. You need to see the profit and loss account. This particular company made losses every single year. It made accumulated losses of £1 million. And then in that year, the director decided to write off his loan. It was a plaything company. He said, right, okay, I'm not getting my money back. I'll write off my loan. There we go. But you wouldn't know that from information at Company's House, from credit referencing agencies, from anybody. So this is why you ask this. And it's made 140 grand loss in that year. and it only had 130 grand assets. So what's it got, another 9 months? It didn't. It had 4 months. And a lot of creditors lost a lot of money. The solvency practitioner made a bit though.
Wasn't me.
I know, well, it wasn't you. It wasn't you. So, never forget that these people are coming to you to buy your services, to buy your goods, because you're good at what they do and they want you. But you're not a bank. So set your policy and stick to it, whatever you do. Set credit limits based on what you think is reasonable. You know, it depends on what you're selling. If you're selling television sets where you let them have 2 on credit or 100 on credit, it depends on how many they're ordering. But set your credit limits and stick to them. And when the computer goes beep, they're over their credit limit, put them on stop. Humans are, oh, it's Bob, he's always paid me. You know, but one day he won't. It's part of life. One day he won't. So just always stay on top of your policy. Cash on delivery, new customer, I don't know you. Why would I give you 30 grand? Go to the bank, get 30 grand, give it to me. Why would you do it? Be strict, be really, really strict. You can insure your debt, as Edith said, it's really very expensive. But it's a good guide because you pass the debt to the insurers and they say, we're not insuring that. That's because they've done all this. So they know whether they're going to insure it or not. They know whether they're going to load your premium up. And once you've got the bill out, stay in touch with the customer. It's customer service anyway, but phone them up. Is it all right? Is everything okay? Nice little letter saying, I've sent you a bill. It's due at the end of the week. Just a quick reminder, hope everything's okay. And then you'll know if any problems happen as quickly as possible, because if you're trying to chase something that's a year old, you're a lot less likely to get it than if it's 60 days old, because the process takes a while. It does take a while. So my little summary is, if you're in doubt, do something, usually picking up the phone, do something about it. Don't be afraid to ask your customers for information. They're used to it. They're absolutely used to it. They open bank accounts, they see accountants, they see lawyers. They're used to being asked for this information, and they've got it. And if they haven't got it, if they can't tell you how profitable they are, then do you really want to be dealing with them anyway? Create a system, stick to it, credit limits, all of that sort of stuff, Mickey Mouse stuff, but you'll be amazed at how many clients say, well, it was a big order, he doesn't normally order that much, so I'll let him get away with it. And of course, because he's filling up his warehouse. And quite importantly, make friends with your solicitor and your accountant so you can pick up the phone and have a natter. Pick up the phone to a lawyer and say, I've got this, I'm not really sure about it. What do we do? Is it time for a statutory demand? Is it time for a chat? Is it time for this? Is it time for that? For the cost involved in keeping decent professionals around you, you will find that you get paid a lot quicker, and it gets the money in your bank. And I think that may be me. I'll do questions with coffee because it's been a long morning. Hey.
Thanks, Steve.